Hi everybody, this is Gary Dean and this is a weekend video report for January 3rd, 2016. Happy New Year. Hope you guys had a fantastic few days off, and let's get started. So we saw some selling pressure on the S&P on Thursday, which I really wasn't anticipating a whole lot to happen, but I closed the long positions just because I didn't really like what the volume was going to be like, and I was expecting a little bit of a pullback, and I really didn't see any reason to be buying on Thursday. Now, I'm starting to see some reasons why we could start looking for some type of low. But we want to make sure it happens. Let the first day, let's see where things open up and then go from there. But, down 19 on, on a low volume day, that was a little bit of a surprise to me. So if just taking a look at, let's just say the bigger picture thing here, and what we're looking at is this is a monthly chart. And the reason why I'm showing it is just the wave count that we're in right now. We could have made a failed fifth here, or we could still get a pop up. We're not really quite sure where we are on this right now. But my point is, even if we do head up and let's say 2150, 2200, the move once that's completed, it could be pretty hefty and a size move that this market has not seen since the Fed's been involved in 2009. So it's just one of those things that you don't want to get too complacent with listening to the long-term investors that get on TV, and be a little bit cautious just because the size of the move to the downside. If we it could still be bullish overall, but I mean, you could see a move down to 1570, even all the way down to the 1227, and it still could be in a bullish pattern. But I mean, seeing the S&P drop this many points, we haven't seen that, since the the 2007, 2008, crash type thing. And being that these markets are, pretty much all computerized, it could go down very, very quickly. So this is just a word of caution, because I'm not really interested in, say, the big picture, but what I am saying is that if we start seeing things break down and news is getting pretty negative, don't just believe that this market is just going to go up, because the pattern and the divergences are saying something totally, totally different, and they're saying to be very, very careful right now. So let's move on and go to the charts that we're, going to be trading off of. And I've been saying that I was anticipating an ABC move. Now, it looked like this was exactly what was going to be playing out, and really my target was going to be someplace around this 2095 level. So I left the door open where it could be a wave A, and then we were going to get an ABC move to make the final C. But we have dropped a lot, and I didn't really think it was going to be coming, down to these levels here. So really the way that, you have to look at it is, if this pattern was going to be in play, it would be that this was just it was just an ABC of an A here. And now what happens is we're coming down and making this wave B. That could take us all the way down to this level before coming back up and making the final wave C. That would actually fit best on it, because if you just look at the distance on from where the low to the high is and where this would be, it would almost match up perfectly. And that that's right now let's just say my number one pattern is where this pullback here is going to be your wave B, and we're going to get a final wave C up, and it will probably happen sometime next week. We'll see that. But once that's complete, and again, I'm not married to this particular pattern, just because this is a 60-minute chart and we have bearish divergences. So this move may have ended right here, and now we're coming down. But if we go and take a look at the 15-minute chart, you can see we're going to be getting some bullish divergences. So the next move, most likely, we're going to get a pop to the upside, clean out some shorts, and then that's where we're going to get, say, a better idea as far as what is going on. So right now, if the bears, if they take the market down on Monday, really the 2034 is going to be the target area here. And again, as long as these bullish divergences stay in place, most likely we're going to get a really nice pop off of that. Now, if these support levels start breaking, really the last one in the sand is this 2021, and if that doesn't hold, then, you know, this may have been the top right here, and we just want to be waiting for bounces to short. But right now, with the bullish divergences in place, and we still have some support, if the bulls can hold it, I'm not against looking for a long scalp, and it may be quick, but it could be pretty profitable on it. So 2034, this is important because it's a fib number as well as support. If they lose that, then the 2021 is the real important one to continue to look on the long side. So if we do get a bounce, let's say they try to open it up on the in the beginning of the year, then really what you want to keep an eye on, the bears want to hold down the 2067, 2073 level. If they can do that, then most likely we're going to be heading down. So I went into Thursday with a neutral kind of label on the markets. It ended up going down a little harder than I was anticipating, but it was one of those things that either side could have, built a pretty good case on the direction. So I'm becoming a little more bullish, but I'm not married to that just because those are off of the 60-minute charts and the 15 and the 5-minute bullish divergences. But the 60-minute charts have, the bearish divergences, and there's still plenty of room to go before we're into the oversold levels. So right now, continue to keep a neutral hat on. I'm not against looking for a long scalp if we see some more weakness on Monday, as long as support holds. And if it does, hey, we'll jump on that and wait for the next setup. But right now, we could continue lower on Monday, and it would make sense. And I'm not looking to jump on the long side because there's not that much of a compelling reason except for the shorter term time frame. So let's see what plays out on Monday. I wish I had a little bit more for you, but we want, with the low volume, you don't want to be presuming anything. So I'm going to let Monday start trading, see how the bulls react to some support levels. Maybe they try to open it up, and then we have to see how the bears, how they react at some resistance levels. So enjoy your Sunday, and I will talk to you guys tomorrow.